So there's a good article in the journal. It's by my good friend, Gunjan Banerjee, and it's titled Trading Stocks Loses Its Thrill. I would get burned, referring to one of the investors. Individual investors are dialing back on risk across the market. Listen, it's not supposed to really be thrilling to begin with, right? Now, it does point out that retail investors have sort of lowered things like margin debt. Now, margin debt, of course, when you borrow money to buy stocks, it can be very dangerous. Remember, in 2021, we were just right there in the shadows of $1 trillion. We're down to less than $700 billion right now. Now, the piece points out that there's less trading going on, right? That trading activity at some of the biggest retail brokerage firms keeps falling. In fact, they mentioned Charles Schwab. The daily average trades have fallen to about 5.2 million in the second quarter. And again, that is the lowest level since early 2021. But do you really want to be grinding your account? Do you really want to be churning your account? This speaks to a maturation process, folks. It also points out the fact that retail investors have followed Wall Street mavens into TLT. That's the 20-year bond, the ETF. I'm showing this to you almost every week or 2 times a week. So far, it's been a disaster, right? Again, you don't have to follow the so-called smart money when you become afraid. The fact is, recent flows have pointed to a more concerned investor, which is fine. 80 billion out of stocks and ETFs, 277 billion into bonds, 700 billion into money markets. I really like that because that money market money right here at the bottom, that's going to end up coming back. Most of that's going to come back into the stock market when the Fed turns things around. The other places are cool to hide out. Here's the thing. I suspect there will be some fresh lessons learned, though, about knee-jerk reactions, even when you're seeking near-term shelter, right? We talked about some of them today on the show. Utilities have been a disaster. Consumer staples have been a disaster. Bonds have been a disaster. These are the things that the experts told you to buy at the beginning of the year for shelter and safety. They haven't been safe for shelf. Now, I know folks want to stay in the game, and that's admirable. The other part of this, though, is investing in companies. Okay, remember, you're investing in companies. You want to be part owner of great companies. This stuff right here, it plays into Wall Street's hands. It generates a ton of money for the people who don't have to take any risk. It's critically important that investors stay the course. Yes, I don't want you getting out of the market, but it means buying and selling, also managing your portfolio in a way that would generate grand slams. And you can't get to grand slams by hopping around too much, by scalping for a few bucks on the upside, or always getting stopped out simply because the stocks are down. So I really work hard on my new book on installing sort of a fresh perspective, lessons on how to make this a lifelong endeavor. More about wealth generation than trying to beat the street every single day, right? I know, leave that to the talking heads who come on financial television. Listen, I'm going to share that and so much more in the town hall on Thursday. I'll also implore everyone, get your own copy of Unbreakable Investor today. You simply go to unbreakableinvestor.com. The book is free. All you have to do is cover the shipping. And remember, listen, the amount of money that's going to be made over the next 10 years in this market is phenomenal. But I also think there's going to be a lot lost. Some of it intentionally, some of it not so intentionally. You got to be ready for it, and I think you will be.